Banking in the UAE can feel complicated, especially when it comes to choosing between salary accounts and non-salary accounts. One promises perks, the other offers flexibility, but which one is really better for you? In this video, I'll break down the key differences, hidden fees, and the real pros and cons of both account types. Stick around because by the end, you'll know exactly which UAE banks suit your lifestyle best. What is a salary account? A salary account is exactly what it sounds like, an account directly connected to your employer. Each month, your salary is automatically credited to this account, making it the backbone of your daily financial life. In the UAE, this setup usually comes with several attractive perks. Most salary accounts don't require a minimum balance, saving you from those irritating service fees. Many banks even allow free local transfers and sometimes waive international remittance fees, especially when sending money to specific countries. Another big advantage is the overdraft facility. Banks often allow short-term borrowing linked to your salary to help cover emergencies before payday. And because banks see your stable monthly income, they're more comfortable offering you credit cards, personal loans, and car financing at better rates. Simply put, banks love salary accounts because your consistent income lowers their risk. In return, they offer more convenience and flexibility than most other account types. But the question is, are these perks as rewarding as they sound? Does your bank actually reward you for having a salary account? Or does it feel like empty marketing? Drop your thoughts in the comments. What is a non-salary account? Now let's flip the coin. A non-salary account is not linked to your employer. You deposit funds manually from freelancing, business, investments, or multiple income sources. This type of account has become a favorite among freelancers, self-employed individuals, and expats who have just arrived in the UAE and haven't yet received a local salary transfer. These accounts give complete flexibility. You control how and when you move your money. However, the catch lies in maintenance. Most non-salary accounts require a minimum monthly balance, typically ranging from 3,000 to 5,000 dirhams. Fall below that limit, and the bank will deduct a penalty, usually around 25 dirhams each month. So while non-salary accounts allow independence, they demand discipline. They're great for managing side income or multiple sources of earnings, but they're not as forgiving if your cash flow fluctuates. Pros and cons of salary accounts. Salary accounts shine in convenience and accessibility, but they're not without downsides. On the positive side, they make life smoother for employees. Loan and credit card approvals are much faster because your income is visible and verified. You often enjoy zero minimum balance requirements, meaning you can use your entire paycheck without worrying about maintaining a set amount. Overdraft or salary advance options can also save the day in emergencies. You can withdraw more than you have, and the bank automatically adjusts it when your next salary arrives. These small advantages create a sense of stability and reliability. However, here's the flip side. A salary account often ties you to your employer's chosen bank. If your company banks with Emirates NBD, for example, you might be required to open your account there, even if another bank offers better deals. When you change jobs or your company shifts payroll banks, you may lose those benefits instantly. Also, while most salary accounts offer free local transactions, many charge extra for international transfers outside certain preferred corridors. That can quietly eat into your savings if you frequently send money abroad. So yes, salary accounts bring ease and trust, but they also limit flexibility. Pros and cons of non-salary accounts. Non-salary accounts, on the other hand, give you total control over your finances. They're ideal for freelancers, entrepreneurs, consultants, or anyone juggling multiple income streams. You're not bound to your employer's bank, and you can maintain the same account even if you change jobs or move abroad. Some non-salary accounts even pay you interest on your savings, a rare but valuable feature. They let you organize your finances more creatively, especially if you use it for investment income, client payments, or online business revenue. However, there are clear drawbacks. Without a steady salary coming in, banks see you as a higher risk. That means you'll likely face tighter loan approvals and may not qualify for overdrafts or premium credit cards. The biggest issue is the mandatory minimum balance. Dip below it and the bank immediately charges a penalty, a frustrating experience for anyone whose income isn't predictable. Additionally, some non-salary accounts have fewer benefits like free transfers or waived charges, which can make them more expensive to maintain over time. So, it's freedom versus consistency, and your choice depends on your lifestyle and how you manage money. Salary versus non-salary. Which one should you choose? Now comes the real question. Which account type fits you better? If you're a full-time employee with a stable job and predictable income, a salary account will likely serve you best. The absence of minimum balance requirements, access to salary advances, and faster loan approvals make it extremely convenient. But if you're self-employed, a freelancer, or have several income sources, then a non-salary account gives you flexibility and independence. You can manage funds without depending on your employer's payroll process. Just remember to maintain the minimum balance so you don't lose money through unnecessary penalties. There's no universal better option. It's about what fits your routine. Salary accounts are structured comfort. Non-salary accounts are independent control. Which team are you on? #team salary or #team non-salary? Drop your pick below and let's see which side dominates the comments. Best UAE banks for each type. Let's talk specifics, because knowing which banks actually deliver makes all the difference. Top salary accounts in the UAE. Emirates NBD offers one of the most comprehensive salary accounts, with free international transfers to select countries and loan discounts for regular salary transfer customers. ADCB, Abu Dhabi Commercial Bank, provides overdraft facilities and cashback debit cards, making it ideal for everyday spenders who want rewards. FAB, First Abu Dhabi Bank, is excellent for higher salary individuals looking for premium services, such as travel benefits, airport lounge access, and personalized banking. Top non-salary accounts in the UAE. Mashreq, Easy Saver stands out for paying interest even if your salary isn't transferred there. It's simple, digital, and flexible. RAKBANK's Fast Saver account is perfect for freelancers. It offers low minimum balance requirements and quick setup, even for new expats. Dubai Islamic Bank's savings account gives you Sharia-compliant options with strong flexibility for multiple income sources, ideal for professionals who prefer ethical banking. Each bank has its own niche, so the smart move is matching their offers to your income pattern and banking goals. Which bank do you personally use, and would you recommend it to others? Let's create a UAE banking review zone right in the comments. And that wraps it up. Salary versus non-salary accounts in the UAE, along with the top banks offering each type. The truth is, there's no one-size-fits-all answer. Salary accounts bring convenience and security. Non-salary accounts bring freedom and flexibility. The right choice depends entirely on your financial habits, employment type, and long-term goals. Now, I want to hear from you. What's the most annoying or ridiculous bank fee you've ever been charged in the UAE? Drop it in the comments, and I might feature your story in the next video. If this breakdown helped you understand your options better, tap the like button, subscribe to the channel, and ring that bell icon so you don't miss more smart money tips the banks never explain.